Welcome to my channel, I'm James, and today I'm going through my valuation methods for Netflix. What we're going to be doing is analysing their financial statements, then using two different models to give a price target of the stock using discounted free cash flow and the Buffett-Graham intrinsic value. Is this stock a buy or a sell in 2022? Well, what are Netflix? They're an American subscription streaming service and production company. It offers a library of films and televisions through distribution deals as well as its own products known as Netflix Originals. Currently, Netflix has 221 million subscribers and have some of the most popular movies and TV shows such as Squid Game and Red Notice. Netflix is currently at $508 a share, down from its all-time high of $700. And is actually down on the year of about 15%. If we compare it to the S&P 500 in that same time, the S&P 500 is up 16% with Netflix down 13%, so the market has beat it. If we go over the last 5 years, you can see the S&P is up about 97%, where Netflix is up 266%. So the big news is that Netflix is down 20% as users fall short, but they have beat profits. You can see here that the company added 8.28 million subscribers worldwide, but this was below their expectations of 8.5 million and below Wall Street expectations of 8.3. So the stock has tumbled since then. So let's have a look at the fundamentals of the stock. Currently, Netflix has a market cap of 225 billion and a share price of 508. It does not pay a dividend. Is the PE ratio less than the market? No, it's not. Netflix has a very high PE ratio of 45.81, and with the market at 26.5, that is a fail. Next, we want to see if the revenue is increasing, and revenue has almost doubled. It's gone from 15.8 billion to 29.6. If we look at Q4 revenue, you can see revenue in the quarter was 7.7 billion. Global memberships are up almost 9% with 221 billion. And if we look at their regional breakdown between United States and Canada, Europe, Middle East and Africa, Latin America, and Asia Pacific, you can see that United States and Canada revenue is up to 3.3 billion, has 75 million in paid members, and the average revenue per member has gone up to $14.78. EMEA is up to 2.5 billion and has 74 million memberships, and you can see revenue per membership is up to $11.64. Latin America is just shy of $1 billion, 40 million paid members, and the average revenue per member is $8.14. And finally, APAC has 871 million, has 32 million paid members, and is at $9.26 average revenue per membership. Can you please give a like on the video? As always, it really helps me out and helps me beat the algorithm and get this to a video as many people as possible. Next, we want to see if the profit's increasing, and it's gone from 1.2 billion to 5.1 billion, so that's a massive pass again. You can see here net income is down from the previous quarter with 600 million compared to 1.4 billion, but it is up compared to Q4 of 2020 with 541 million. If we look at the breakdown of why the profit is not as much compared to the previous quarter, you can see obviously revenue is up from the previous quarter, but the cost of revenues is almost up $1 billion. Marketing was up, technology and development was up, and also general administrative. So that's why the operating income was only 631 billion compared to 1.7. And then eventually the net income was only 607 million. Now we want to see if the shares outstanding are decreasing, and you can see they're not. They've actually issued more shares. It's gone from 431 billion to 440. Now there is actually a reason for that, which we'll talk about in a second. You can see that they didn't engage in share repurchase in Q4 as they funded their acquisition for the Roald Dahl story company from cash on hand during the quarter. This was one of the largest purchases that Netflix has made, and some of the notable works of Roald Dahl are James and the Giant Peach, Charlotte and the Chocolate Factory, Matilda, and many more, so expect those films coming out on Netflix very, very soon. And finally, has the free cash flow increased, and it's gone from 2.8 billion in the negative to minus 131 million, so that is a pass, but it's not positive. Netflix are anticipating free cash flow being positive for the full year of 2022 and beyond, so that'll be very good to see. So overall, that is 3 passes and 2 fails, the failures being the PE ratio greater than the market and the shares outstanding increasing. You can see that the free cash flow ratio doesn't work because it's a negative free cash flow and they don't pay a dividend. So now we're going to look at discounted free cash flow and the Buffett-Graham intrinsic value. We'll first look at discounted free cash flow, and I've calculated the future free cash flows based on Netflix saying that they are positive. And this would give a calculated stock price of $92 a share, which is massively down from the 508. Now, it is hard to calculate Netflix's future free cash flows based on this, but we'll need to see in 2022 once they do it. Just putting in some rough estimates there. If Netflix had increasing free cash flow from 1 to 5 to 7 to 10 billion, it would have them about fairly valued, but currently Netflix does not have free cash flow, so it'll be very interesting these following years. And finally, based on the Buffett-Graham intrinsic value, we have earnings per share and the expected growth rate. Netflix has an earnings per share of 11.09, and with an expected growth rate of 42%, this is a very fast growing company. And as you can see here, this has a fair value of $1,000 a share, $1,029, which means it's at a 102% discount. So I would say this model is closer to the valuation of what Netflix should be expected to be, and you can see it is massively undervalued. If we look at what analysts are saying, they're saying it's currently a moderate buy with 12 buying, 10 holding and 3 selling. They have an average target price of this time next year of $564, which is an 11% upside, but on the high side, analysts are saying it could go as high as 800, which is closer to our Buffett-Graham intrinsic value. So the model is saying it's a buy, and analysts are also saying it's a buy. Right, guys, thanks for watching the video. Please give a like. If you enjoyed it, give a comment your thoughts down below on Netflix and what other stocks you want me to look at, and I'll catch you guys next time.